Hi, I'm Alex Miller, and this is the Citi Institute podcast, where we explore the forces shaping finance, the global economy, and the way we live and work. In each episode, we bring you insights from thought leaders and innovators driving change, helping you stay informed, navigate challenges, and seize opportunities in a rapidly evolving world.
Policy is personnel and personnel is policy. Understanding who's driving that policy is really important to kind of understanding where the outcomes may land.
AI is a powerful, powerful tool, and it's only going to become more common and more integrated into production, into our daily lives, into the way that we think about the world.
Welcome to the Citi Institute podcast. The current tariff regime is the most significant that the US and global economy has faced since the early 1900s. Yet, the global economy is now much more deeply integrated than then. Coming after decades of intense global integration, even allowing for trade deals yet to be struck, tariff changes are likely to require a significant reprofiling of global goods production, including broad patterns of sourcing and production. As such, there are few precedents to draw upon in judging the likely effects of these policies. To understand them better and what's driving them, and to discuss a related report from Citi Institute titled Invest USA, today we are joined by Citi Research's Global Chief Economist Nathan Sheets and Citi's Head of Global Government Affairs, Candi Wolff. Before his current role as Chief Economist, Nathan has variously served as Undersecretary of the US Treasury for International Affairs, representing the US government on international economic issues, as well as working at the Federal Reserve Board as Director of the Division of International Finance and as a Senior Advisor to the US Executive Director of the International Monetary Fund. Alongside Nathan, we have Candi Wolff, who is responsible for Citi's global government affairs, including US federal, US state, and international government relations. Prior to joining Citi, Candi was a partner in the legislative and policy practice at a major US law firm, where she represented clients in legislative matters before the Congress and the US administration. So, without further ado, let's dive into how to think about the world today. Candi, in your role as Head of Government Affairs globally at Citi, can you share what you think the purposes of the tariffs are that the US have introduced, and perhaps what the problems are that they're trying to solve?
Well, Alex, the president and certainly senior members of his administration feel that the world has taken advantage of the US. They think about trade in the context of trade deficits. And the bigger the trade deficit, the more the perception that the U.S. has been taken advantage of. And the president sees tariffs as a way to address the rebalancing of trade, to bring back manufacturing, and to make America wealthy again. He has a plan that includes tariffs, it includes tax cuts, and it includes deregulation that address making America wealthy. And tariffs are, one of those three pillars. I think the way that the president has viewed tariffs to date is that they kind of fall into three buckets. One is, as I said earlier, just a way to reindustrialize, to bring back manufacturing, encourage investment in the U.S., manufacturing in the U.S., and in particular in sectors critical to national security. So autos, steel, high tech. They're a source of leverage. And we've seen the fact that there are negotiations ongoing with a number of countries, and it's about extracting changes not only to tariff, but to non-tariff barrier issues, to currency manipulation, to potentially other categories unrelated to tariffs, such as defense spending by a country. And then tariffs are a way to generate revenue. And there's the 10% tariffs that are currently in place across the board. That is a revenue stream that the administration has been looking to as a way to decrease the deficit, particularly as they try to advance other domestic policies such as tax cuts and extending expiring tax cuts, they need to address the deficit concerns associated with those tax cuts and tariffs are revenue. So there's different purposes for the tariffs, different direction, different objectives. But overall, it's really about the rebalancing of trade, the bringing back of manufacturing, and making America wealthy again, according to the Trump administration.
Candi, the administration itself is conducting these trade negotiations with multiple countries, of course. What progress are you hearing in terms of how these are going?
Yeah, I think the markets, and Nathan will speak more to this, are waiting with bated breath to sort of see where these negotiations lead. The administration has signaled that they're in negotiations with about 20 countries right now. Those countries range from India, UK, Australia, Vietnam, Japan, Korea, Taiwan, Israel, Argentina, Ecuador, Brazil, and the Kingdom of Saudi Arabia, which was just added to the list most recently. So those seem to be the countries sort of first in line, if you will. Several of them, like the UK, Australia, and Argentina, were not subject to the higher reciprocal tariffs. They're only at the 10% base. So, what we're all kind of watching is as deals get rolled out, what happens to the overall tariff rate? If you're at 10%, does it go down to zero or does it stay at 10%? We've heard some negotiations, such as with Vietnam, that perhaps it would only be half of the tariff rate. So if you're 46%, you might only go to 23%. We heard that perhaps with Japan, that the negotiations are to drive down the tariff rate to zero. So I think countries are sort of negotiating in different positions. It's not quite clear where they're going to land, but I think the effort is to get to a series of deals, and certainly prior to the 90-day expiration of the tariffs, which is July 9th, and so a 90-day pause of the tariffs, which is July 9th. So I think the other point around the deals is we're not expecting full-fledged deals, right? Not all the T's will be crossed and all the I's dotted. What we're really expecting are frameworks, and the USTR here in the U.S. Trade Representative's Office has kind of put out kind of a checklist of things that they want to see included in different deals. Not every country will have all the same pieces, but they've at least got sort of a more standard format that they're trying to follow in terms of a framework. And I think what they'll try to do is, address the framework, and then outside those 90 days, you can get to the final agreement with details being hashed out, because there's just a lot of deals that need to be done, and challenges in terms of timing and personnel to actually get the negotiations completed.
Thank you, Candi. You set the scene fabulously there. Maybe, Nathan, I can turn to you. You are Citi's global chief economist. The US economy itself has been one of the strongest performing economies globally for, really frankly, many years post the financial crisis of 2008-9. For you, what have been those key facets underpinning that strong performance? And I guess the ultimate question is how much of those factors are structural versus perhaps cyclical?
Well, this is a great question, one that we've spent a lot of time talking about in recent years. Indeed, since the onset of the pandemic, the U.S. economy has grown at an average pace of around 2.5%. In contrast, the euro area has grown by about 1% a year. And I think that gives you a good metric of U.S. outperformance relative to at least other major developed market economies. Kind of my sense is that this strength we've seen in the economy, that there have been two key engines. The primary engine has been an absolutely tireless U.S. consumer. U.S. consumers, their taste and appetite to continue to spend has been extraordinary in this period. I think that's particularly true for upper income consumers, which have enjoyed very strong balance sheets and favorable wage gains and employment prospects. But broadly across the income distribution, the consumption has been strong. But then the other engine that we shouldn't lose sight of is the U.S. corporate sector. It has been innovative. We've seen that with the onset of AI, globally competitive, benefiting from cheap natural gas and other energy resources. And in recent years, we've seen some reshoring in the U.S. manufacturing sector as well. And I think this favorable performance of the corporate sector has very much been reflected, let's say through the end of of last year, was very much reflected in equity valuations. And then finally, you asked this critical question: how much of what I describe is cyclical versus structural? It's hard to say, and I think it's fair that some of both are probably at work. But I think importantly, there was a structural component. And till a few months ago, I think economists who for many years had thought U.S. trend growth was maybe 2% or a little bit below, were entertaining the notion that, well, maybe as a result, particularly of what was happening in the corporate sector, maybe trend growth is even a little higher than 2%. So I do think there was a structural component to it.
That's fascinating. Maybe I can turn to you, Candi. In your role, the world's always in flux. It changes at different moments. What are the key trends that you're hearing from clients that you're speaking to? And I guess what are the key messages that you're giving to our corporate clients around the world? Has that shifted at all?
I think the key trend, Alex, is that geopolitics has such a big impact on corporate decision making, right? I had one of our bankers sort of make the point that one of the biggest counterparties for any company globally is the government, and that geopolitics, not just here in the U.S. but around the globe, has really had an impact. And so you see corporations having to address how are governments thinking about their the geopolitics, because it impacts how nationalistic, how protectionist, what kind of policies are generated from that politics and that thinking. There's also the technological trends that I think are shaping. So simultaneous with kind of the geopolitical, you've got the technological trends, and you hear about how AI is shaping how business operate and how information flows, and how governments are trying to think about that and either accelerate, restrict, encourage. There's different trends that governments are thinking about in that space. And then of course economic, and as Nathan has already stated, but what I think we saw certainly with COVID is a greater emphasis on supply chain resilience rather than on efficiency, and the changes that are coming with that. And I think tariffs sort of further accelerate that thinking as to what do you do with your supply chains and where should things be spaced. And geopolitically, we're moving into a multipolar world with much more fragmentation. And we know that the world order has been disrupted, and that was true before President Trump became president, that there was changes that were going on. I think when I step back and look at the trends in the intersection of policy, when I talk to clients, particularly here questioning sort of the U.S. policies, you've got to remember that policy is not made in a vacuum, and there's always a process. Sometimes the process, gets challenged, and there's court cases that challenge processes. Sometimes it's, reinvented, but it's still fast-paced, and there's still a process where things have to occur to kind of drive outcomes. So think tax cuts. You still have to operate in a process by which the Congress can still pass these tax cuts. And sectorial tariffs, which requires a process and investigation and a report before you know what the tariffs are going to be. Or in the case of the European Union, they often need unanimous support, correct? Which takes time. So everything's got kind of a process. Personnel, as we have a saying in Washington, policy is personnel and personnel is policy. Understanding who's driving that policy is really important to kind of understanding where the outcomes may land. And that's particularly true in the case of tariffs. And then you really have to kind of look not at the policy landscape in sort of one lens, but to have a different set of perspectives to grasp the nuance and the multidimensional nature of a lot of these debates. And then for the US, what's so important is, at the end of the day, there is one decision maker, and he is making these decisions, and that's the president. And so there's a funnel where everything goes up, but the central source of power at this point in time is still the President of the United States. And how he implements and the decisions he makes and sort of that style of governance is something that you tell companies you got to kind of keep in mind and think through. How do you ultimately influence the thinking of the president, because that's where the final decisions will be made. And as we've been talking about tariffs, just to sort of conclude with these deals that are getting cut, they're going to get signed off by the president. So it's not whatever negotiations occur, they're still going to have to go through a presidential lens to determine, is this sufficient, and to give sort of the final check of approval.
That's fascinating, Candi. And that word resiliency that you used early on in that comment, I think really resonates. Nathan, over the last decade, we've seen multiple challenges to the model of globalization. Democratic elections where expectations have been seemingly confounded, COVID-19, you name it. So we're used to managing complex news flow and geopolitical shifts. But for you as an economist, when you've been interpreting this, what's been the framework that's been most helpful to you in making sense of this complexity? And does it still apply, I guess?
Well, I think books have been written about this and will continue to be written about this. I think globalization and its discontents, as it were, is the broad theme that really characterizes the last 30 or 40 years of economic policy. And as you say, Alex, what's clear is that over the last decade or so, there's been a backing away from full throttle globalization, kind of a sense that even if those who were advocating globalization got the economics of the case correct, they didn't get the political economy of the case correct. And I think this is manifesting itself in the global economy in an ongoing reprofiling of supply chains. This was certainly the case through the end of the last year, and as President Trump was taking office, that there was a significant rebalancing of trade and sourcing, particularly away from China, which was creating opportunities for a number of other countries, including some in East Asia, India, Mexico, I think, was a beneficiary. And as I mentioned earlier, the U.S. was seeing some reshoring. I think with the tariffs that are being introduced, we're likely to see further rebalancing and recalibration of global supply chains. And maybe something more of a insularity in supply chains than what we've seen previously. And then on the political side, this reality and kind of the protest against globalization, I think, has manifested itself in terms of both a left-wing and a right-wing critique. On the left, it's been about inequality and unfairness and the way the gains from globalization have been shared. And on the right, I think it's more been about national identity and immigration and trade policy and so forth. So I think that there was a lot of economic substance in what was done as we moved through that period of global integration, but certainly not enough sensitivity to the political realities, the social realities of that. But this is a much broader global phenomenon that we're seeing in a lot of countries.
Yes, genuinely a global phenomenon, really, wherever you look. I guess, Nathan, you speak to a wide range of different people. If you think about the investors that you speak with, presumably they're currently contemplating what various possible configurations of tariffs globally might mean for global trade, economic performance, and how that pans out. What are you hearing from investors? What's the sort of debate that you're hearing? And I guess the other point is, does that differ if in North America or Europe and indeed Asia?
I think the key word that I'm hearing from both investors and corporates is uncertainty. That the tariffs that the administration has rolled out are the largest that we've seen in 100 years. And as a result of that, we don't really know what their economic effects will be. We haven't seen tariffs like this in a major global kind of setting before. And then I think, as Candi has articulated well, over and above that kind of economic uncertainty, what does a tariff look like in this world? There's still huge policy uncertainty as to what the composition of U.S. tariffs is ultimately going to be.
Thank you. Candi, maybe I can move to you and maybe just remind some of our listeners who might not be familiar with how wide-ranging a role you have, the type of corporates or policymakers, the type of clients that you speak to, and similar to what I asked Nathan there, what you're hearing from your perhaps different set of counterparts.
Yes, so running global government affairs, our clients, if you will, or the people that I often talk to are government officials, and occasionally on the regulator side, of course. But if I'm traveling, we're going to get into try to speak to the sort of the executive branch in each of the countries, whether it's through the prime minister's office or president's office. Also, more and more, which we've been speaking with previously, but now more relevant, in the trade ministers and the foreign ministers and the finance ministers' offices. And so, we'll really take the opportunity to engage with policymakers. Also, the think tanks, a lot of experts really trying to learn and gather from them the different trends, whether they lean right or they lean left. You really want to kind of understand where the thought leadership is tacking, and so I'll do a lot of those meetings, and then of course client meetings as I go around. And last year it was all about the election and the potential outcome, and this year it's all about what is the administration's strategy, objectives, what was sort of the outlook for the first 100 days, and now it's really pivoted to, what's going to happen with tariffs and kind of next steps. And, we're at that intersection, as you know, Alex, of the first 100 days, and then we got the next 100 days coming up, and sort of, the pivot's going to be what's next. Now we've seen what's just happened, what's next, and so that's becoming more of the dialogue, and really trying to interpret where we can interpret, and provide some direction around what we've been hearing, in terms of where we think the administration is going. You don't always know what the outcome's going to be, but you do have a better sense in the first 100 days of the style of the administration and how they approach the issues, and so we're starting to think about, okay, what's the pivot? Kind of, what's the next 100 days going to bring? And so those are some of the questions that we tend to get. And fascinating conversations, but I think even all governments are still trying to focus on, what is the U.S. administration planning to do.
There's no
their
monopoly
whole
of wisdom
policy
here.
is pivoted. They're trying to do their own policies in terms of preparing, but certainly for the first few months, it was about how do we interact. Now I think it's beginning to pivot to countries thinking about their own dynamics and what the shifts might mean. For instance, Europe really needing to put more investment into defense and coming up with their own plans and strategies that they're going to begin to implement, over the next year or so.
That's fantastic. But let's pivot that to Nathan, and I guess the point is, what is that framework to sort of think about how the next 18 months unfolds, Nathan? And what's your expectation? Do we see significant change in Europe in response to this, for example? Do we see significant change in Asia? What's your expectation? I know it depends, of course, how these deals pan out or don't, but
I think it's helpful to break the world into three distinct trade corridors. The first is China. In contrast, maybe the least afflicted trade corridor right now is with Mexico and Canada under USMCA, where vast majorities of trade continue to occur at a zero tariff rate. And I think there we're watching to see, well, does that persist? And then over time, I would expect, and maybe Candi would want to comment on this, that the United States is going to want to commence negotiations with Mexico and Canada about a USMCA 2 or whatever they call the follow-on agreement. But that looks like the most promising trade corridor, and maybe even Mexico, if China's tariffs persist, maybe that creates some opportunities for Mexico as a U.S. supplier and relative increase in its competitiveness. And then the third corridor is everyone else, which is Europe, Japan, East Asia, the rest of Latin America, and so forth. And that's where, as Candi described, they're working hard to negotiate these deals. And as she said, my view echoes. I think we will see some deals across the various regions. The place where I'm the most concerned about willingness to negotiate and capacity to negotiate is with Europe. I think Europe very much feels that for decades they have been in step with the United States and a reliable U.S. ally. And now the U.S. is going and unilaterally shifting the terms of engagement. And to the extent that they think of this in the context of a multilateral ongoing kind of game theory kind of setting, it means that maybe they want to draw the line.
I think maybe to chime in on Nathan's point there for a minute, Alex, on kind of I think that's a good outline of the three different types of negotiations, with China being the most difficult, Europe probably following as second most difficult, and then these other countries kind of coming in with some type of framework that, I still think it will be difficult. I heard a couple of the folks who were negotiating over the weekend say, in theory, getting to a framework seems reasonable, but it's the actual details when you get there are a lot harder, right? And
devil's in the details, sure.
That's what can bog this down. But I also think stepping back that we've got to remember this administration isn't stopping at reciprocal tariffs. They've also put out a series of investigations under Section 232 that applied first to autos and then to steel and aluminum, but they've expanded the list. So now you have copper, trucks, truck parts were added, critical minerals. There's other categories that are going to be under review and ultimately sectors subject to tariffs. So the uncertainty that might be eliminated by understanding what tariff level might be reached with respect to the reciprocal tariffs doesn't take into account that underneath that, there's going to be products that are going to be at a different tariff level and within sectors. Now, what's happened to date is that those sectors have been carved out of the reciprocal tariffs, and presumably they would be going forward. Also includes pharmaceuticals, for example. But I do worry, that we're sort of hopeful that there's more certainty around the reciprocal tariffs as deals can get cut. But I think there's still going to be a high level of uncertainty about what the sector tariffs are going to look like, what exemptions might be underneath those, and what level of tariff would be applied. I mean, to date, it's been 25%.
So we clearly shouldn't be lulled into thinking that the 90-day pause is
no,
is
and,
it.
And I think the question is going to be what happens when you hit 90 days, and if the deals aren't done, there'll be a pivot to, and I think an assumption that there'll be another 90-day pause. I think there's some, theory also that, well, perhaps no, that there would be the imposition of tariffs because you don't want to keep pausing. No one knows the answer to that, and we're still light years away from getting to
Navigating
90
through
days.
that.
But nevertheless, I think, we're going to eventually hit that point of what do you really do with the tariffs. And I think that goes to the next 100 days. I see the U.S. wanting to accelerate the tax cut debate and really trying to get the tax cuts made permanent or get done because, as we saw in the first term, the administration handled tax cuts first, deregulation, and then went to tariffs, and you had a different outlook on the economy. I think they're going to try, as they slowed the tariffs down, to push the tax cuts and some of the deregulatory up front to see if that will mitigate some of the impact. And I defer to our economists as to whether that's a successful outcome or not, but I do think policy-wise you're going to see an acceleration.
I think this point that Candy's making is a very important one. And the way I think about how the US economy is likely to perform through the end of this year, my expectation is that Q2 is likely to be okay, that there will continue to be some front loading of spending in electronics because we have the carve out, and then in maybe inventory accumulation and other spending in anticipation of some of the reciprocal tariffs being raised again. So I think Q2 is likely to be all right. Then in addition, the Fed has got to wait and see how all of this plays through. But if you do get into that environment of a markedly slowing economy, I think the Fed is likely to respond. So there may yet be some support out there that we're not comfortable fully factoring into our forecast. But I think as Candi flags, these are things that we should be thinking of.
And Nathan, I mean, we've looked previously at some of these longer term trends such as demographics and what that means to how countries around the world are thinking about their working population shrinking over many years. And of course, that's driven a lot of the broader immigration debate. But do you also see potentially some of this change, this whole kind of disruptive situation driving or accelerating artificial intelligence, blockchain, digitization, the sort of things that corporates can respond with in their own purview as a way to kind of, at least at the margin, control costs?
This is an issue that I'm thinking about really vigorously in real time. It's kind of what are the interactions between this shift in U.S. trade policy, the tariffs on the one hand, and some of these deeper kind of technological structural developments, particularly like AI. And I think where I land is that on the one hand, let me be a two-handed economist, if I may. So that on the one hand, I think AI is here to stay. AI is a powerful, powerful tool. And it's only going to become more common and more integrated into production, into our daily lives, into the way that we think about the world. However, given the uncertainties, and this is the other hand, given the uncertainties that we face, I think what we're likely to see is headwinds on the investment that's likely to be necessary to get all of that AI in place. So do I think this reverses AI? I don't. We will still get there, but I worry that we're going to get to a place where we're fully reaping the economic benefits of AI more slowly and over a longer trajectory than if we hadn't been faced by these uncertainties. Bottom line, corporates, I think, are gonna want to hesitate. They're gonna pull back on their investment plans.
Thank you, Nathan. Candi, I'd love to hear your perspective on that question, and also, I guess, the message that you would leave, governments around the world when thinking about these next sort of few quarters.
Yeah, I mean, we definitely see the acceleration, and I think you see this administration, the Trump administration in particular, really wanting to accelerate a lot of that technology. I would suggest that perhaps the Biden administration was more cautious. They put out, guardrails. And I think this administration, not to suggest that there aren't guardrails, there are, but definitely wanting to, continue the acceleration of AI. And, I think all governments are kind of trying to figure out that balance between how to utilize it and how to handle the repercussions, if you will, or the follow-on effects of what AI means from productivity for jobs, and how a particular government is going to manage, the changes that come technologically from AI. And so, there's a lot of balancing. It's also around the question, the ethical use of AI, where countries have to grapple and governments have to grapple with those questions. So I think, yes, there's a continued acceleration and certainly not a deceleration with the U.S., but countries are going to grapple with all the challenges that means, and the geopolitical implications for that are enormous. Without really fully understanding, what's coming next, countries are trying to make decisions. So this is probably, I think, one of the biggest challenges, putting aside kind of the economic driven, but really that technology is changing how countries and people use technology, think about technology, and then how it's going to be integrated in their lives. And that's going to be the big challenge for the next decade. It's how governments respond to it.
That's fascinating. I should flag there's a report the Citi Institute has published on digital dollars and how public sector governments around the world are going to use blockchain increasingly to drive adoption. So there's a lot happening, we know, beneath the surface. Look, we could talk all day with you two. You're incredible, and your expertise that you've shared, your perspectives from around the world is just invaluable. So let me just close by thanking you, Candi, thanking you, Nathan, for your time. And we really appreciate your time here on the Citi Institute podcast. Thank you.
Thank you.
Thank you, Alex.
The speaker's views are their own and may not necessarily reflect the views of Citi or any of its affiliates. All opinions are subject to change without notice. Neither the information provided nor any opinion expressed constitutes a solicitation for the purchase or sale of any security. The expressions of opinion are not intended to be a forecast of future events or a guarantee of future results.